Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the FX options market combined volume expiries, a weekly retrospective review for the financial week ending the 5th of the 6th, 2020. If this is your first time with us, the FX currency options market runs in tandem with the spot FX market, but where traders typically place call and put trades on the future value of a currency exchange rate, and these future contracts typically run from one day to weeks or even months. Each morning from the Forex Academy website, our analyst Kevin O'Sullivan will bring you details of the notable FX options market combined volume expiries, where they have an accumulative value of a minimum of $100 million or more. Quite often these institutional expiries can act as magnets for price action in the spot FX arena leading up to the New York 10 a.m. cut. The big institutional players hedge their positions accordingly. Kevin also plots these expiration levels onto the relevant charts at the various expiry exchange rates and color codes them in red, which would have a high degree of being reached, or orange, which is still possible and where they are said to be in play. He also labels the other maturities in blue, where he deems it unlikely price action will be reached by 10 a.m. New York, and thus they should be considered out of play. Kevin also adds some technical analysis to try and establish the likelihood of the option maturities being reached that day. These are known as strikes. Please bear in mind that upcoming economic data releases will not be factored in, as well as policymaker speeches and technical analysis may change in the hours leading up to the cut. Let's take a look at last week's option maturities to see if they affected price action. On Monday the 1st of June, Kevin's early morning analysis suggested the Euro-USD pair was overbought and had potential for a pullback to the 1.1100 maturity at the 10 a.m. New York cut. In this picture we can see the same pair where the exchange rate was 1.1127 at the cut. You will however note that the price action has previously gravitated towards the 1.1100 before moving higher by just 27 pips at the maturity. Tuesday was light on the options maturity calendar, and so let's move straight into Wednesday. We have the US dollar Japanese yen pair with Kevin's early analysis suggesting price would move higher to the resistance line before falling lower to one of the two maturities at 108.70 or 108.50. Here we can see a later slide of the pair which ran exactly as predicted and where the exchange rate was ranging between the two red maturities. Here we can see that the price hit 108.66 at the 10 a.m. cut, just a few pips in between the two. Still, on the Wednesday we had a slew of options between 1.1175 and 1.1220 and price action remained concentrated around those levels. Price hit 1.1215 at the 10 a.m. cut, which was an official strike. Again, on Wednesday, we had a maturity at 1.2560 for cable. Kevin's early technical analysis here where he suggested the price action was capped and due for a pullback. As you can see here, price action with a few hours later confirmed the analysis with the exchange rate hitting 1.2566 at the cut, just 6 pips away from the maturity. On Thursday, Kevin's early analysis of the Euro-USD pair was that it was oversold on the 1-hour chart and there could be a great deal of volatility after the Eurozone interest rate decision and the US jobs data. Indeed, we see that the volatility was borne out this chart at just before the time of maturity. Price hit 1.1268 at the time of the cut, where the exchange rate hit 1.1268 just 23 pips above the 1.245 maturity. This might suggest option maturities play a part in even the most volatile trading sessions. Because the Euro-USD pair was at multi-month highs, we can estimate that most of the options were calls, where all traders would have been in the money at the cut. On Friday, we have the Euro-US dollar pair in focus again with Kevin's analysis suggesting the pair was overbought, and in fact the pair did pull back in volatile trading. Price action for the pair hit 1.1297 at the cut, just 3 pips below the option at 1.1300, which Kevin labelled in red. All in all, this was a very successful week, where our analysed and option maturity levels have helped traders make profitable traders in this very difficult market. Please remember, Kevin's technical analysis is based on exchange rates, which may be several hours earlier in the day and may not reflect price action at the time of maturities. We suggest that you get into the habit of visiting the Forex Academy website each morning just before 8 a.m. BST and take the levels to plot them onto your own trading charts and incorporate the information into your own trading methodology in order to use the information to your advantage. Remember that the higher the amount, the larger the gravitational pull towards the exchange rate maturity at 10 a.m. Eastern Time. For a detailed explanation of FX options and how they affect price action in the spot Forex market, please visit the video in the Forex Expiries playlist. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.